and today I'm going to tell you how to buy a fix-up property with as little as 3.5% down payment. Okay, let's walk through a typical scenario. You and your realtor find a steal on a property, and the asking price is, let's say, $100,000. The only thing this house needs is a kitchen and a bath remodel. Well, maybe some new carpet and some paint as well. This could not only be your dream home, but the potential to build equity is crazy. Now, you're in a very, very competitive market, so you can't afford wasting any time on submitting your offer, which is why it is very, very important to get pre-approved before looking at houses. Now, luckily, you've been pre-approved by an FHA 203K certified mortgage broker, because the FHA 203K loan is the only loan that will allow you to take advantage of this opportunity by rolling these types of costs into your mortgage. You and your real estate agent decide to offer full price for this house. However, you ask the seller to pay all your closing costs and what we call prepaid items, which are your taxes and your escrow account. The seller accepts this offer, and now you're under contract. Okay, what's next? Well, it's time for you to meet with the home inspector and contractor, ideally at the same time, to walk through the property and assess all the required repairs as well as all the desired modifications, or remodeling if you will. Within a few days, your contractor returns a bid to you, let's say for $20,000. So now what? Well, you need a loan to buy the house and remodel. Well, what if you run out of money? Well, what's your down payment going to be? There's lots of questions here. Well, with the FHA 203K Streamline loan, remember it requires 3.5% as a down payment of the total cost of the project. Now, this includes your purchase price, your total cost remodeling, and what we call a contingency reserve. The contingency reserve is more like a buffer in case you run out of money during the project. It's for all those unforeseen things that once you start a remodel job that you generally run into. But on a typical project, the typical reserve amount can be anywhere from 10 to 20% of the total bids. Now, if you complete your project under the budget, all the money you do not use will be applied towards your principal balance of your mortgage. So there's never any money left on the table. For our example, we're going to say you're purchasing a house for $100,000. Now your total bid is $20,000 for repairs. We will do a contingency reserve in this scenario of 10% of the total bid, which is $2,000. So the total cost of the project is $122,000. Your minimum down payment is 3.5% of the $122,000. So $4,270. Since you asked the seller to pay your closing costs and prepaid items, in theory, this is all you will need at closing. Now, if all this sounds great to you, but unfortunately you just don't have the money for the down payment, did you know that you can have the money gifted to you from a family member? Or if you qualify, you may even be able to get your down payment from the county in which you're buying. It's called down payment assistance. There are a lot of first-time home buyer programs available, so contact our team for more information.